Good morning, everyone, and welcome to the first series of financial modeling and macro seminar we will have here at RSM. For all of you who are from RSM, welcome. And for some of you that are outside RSM, welcome. And what they call that today, we will go through a short session of about 1.5 hours regarding basic financial modeling and macro. Now, for some of you, this might be very basic. For some of you, this might be very advanced. Me and Pa Adam, who will be handling most of the presentation today, is here for you to ask questions in details, though understand there's over 80 people here in this room, so please put all your questions into the chat box, and our team will sort it and put it into a list so that Adam can answer in the last 15 to 20 minutes. I will help with that, answering those questions. But welcome today, and hope you learned something. And what the Colette, wish you the best. And if you believe that we should have a more advanced version of this financial modeling class for all of you, please send what they call it a note, and that you'd like to have another class, and we'll be more than happy to set up a second, more advanced class. All right, so I'm here today to welcome all of you to this class. And Adam here today will be presenting to you in relatively deep details and for assumptions, for projections regarding the macros. Now, I think there's a few pages regarding RSM. I'm sure most of you already know what the for some of you that are not from RSM, we have 64,000 people worldwide, 820 offices, 120 countries. In Indonesia, we have about 800 people. My division is the financial advisory division. There are tax divisions, advisory division, risk management divisions. Next slide. And I think I just keep on going. I think everybody's ready to start the meeting today. Go ahead, Dan. Let's start the presentation.
Thank you, Pa.
So I'll see you guys all later. Have fun. If you have questions, don't forget, if you got questions, put in the chat box. Thank you. Go ahead, Dan.
Okay. Thank you, everyone, for attending this basic financial modeling and macro. So this is one of the first series of 3 series for the financial modeling. So if we got the feedback that you require the additional training, we will have the intermediate modeling and macro. And then the third one would be advanced modeling and macro. So for the basic financial modeling, right now, the agenda for today training is key structuring of the financial model, financial model steps to build one, assumptions and drivers. And then we also will create an income statement, balance sheet, and a statement of cash flow. And then we'll also train a bit about the macro. And then after we finish with all the slides, we can start the Q&A. So this is the guideline for the webinar. So based on what Pa Budi already mentioned you, that anything you will require, you can chat in the box, any question regarding the financial modeling and the macro. And then you will also have to put your name and organization when you put the name of the questions. And once you finish with the webinar, you can download this PowerPoint. And then we will also give you the Excel with the macro as well. And we didn't put the time bomb in your macro, so it will not expire. You can use those macro and you can adjust it based on your requirement. So I will start with the basic modeling. So what is the purpose of creating financial modeling? Okay. Financial modeling has several purposes. Most of the time, we will require it for transaction purpose, financial purpose, such as bank, M&A, and everything. And then majority in Indonesia require it for management purpose. In BUMN, you will require what we call a long-term planning. Well, something with your private company, you will require it for your budgeting. Whoever does forecasting and financial modeling is same with the budgeting. The answer is no. When you create a budget, you create a very detailed one, right? Let's say you're making a budget. A budget will say that I will need this capex for exactly this item. However, when you make the financial projection, you create a lump sum. For IT department, I will require this X amount. For vehicle, I need X amount. For budgeting, you will have to break it down. Budgeting, you will have to say, I need this car. And you will have to put those budget in your budgeting plan. And normally, your budgeting plan is 1 year. While a financial modeling or a financial projection can go to 5 years or until the end of the contract. And then we also have what we call for legal purpose. What is the requirement for legal purpose? Okay, sometimes there are a legal dispute that also has connection with the financial modeling. Let's say you have a cash flow. Cash flow mentioned in deeds is X amount, but what you get is Y amount. So there's a gap between X and Y. And when you have this gap and you want to sue the other parties, you will have to create the financial modeling to show the gap. This is why, in the end, in whichever department you are or which company you are, you will require a financial projection in the end, whether for transaction, financial, legal, or management. So, okay. So, what is the key structure of financial modeling? Okay. The basic of financial modeling, the good one, always start with financial statement, right? Your beginning balance will start with your financial statement, whether it is in-house or audited financial statement. In order for you to build a good model, you will have to make sure that you have all the breakdown you will require. So there are inputs, processings, and outputs. This is exactly like when you're building an application. Because in the end, your financial model, when you combine it with scenario and you combine it with the macro, it will become like an application. Why? When you press one button, it will result an XY number. When you press the other button, it will result YZ number. That's why in the end, when you have lots of scenario, when you're building your financial model, you will have to use macro eventually. Why? Because you need to avoid a circular. Let's say you want to calculate dividends. Why? Dividends will create a circular number when you calculate it based on the same year. Why? The cash flow and the dividend will be pulled from the one number. Therefore, it will create a circular. What happened to circular number? Sometimes when you have a circular number, the number won't show at all, depending on how you build your Excel and what option you turn on. So in order to avoid those circular, right now we can use the macro. Okay. Inputs, processing, output. What are the inputs? Inputs are assumption and the drivers. It can be clearly identified. It can be justified. Inputs also is your financial statement, the latest one, either it's audited or in-house. Processing. What is the processing? Okay. Processing is including your calculation in the model. It needs to be transparent and it needs to be easy to follow. Let's say you create a financial model, and then within those model, you say that XY multiplied by 2.5%. But the only one that understands the 2.5% is yourself. There's no one understand the 2.5% other than you. So it need to be justified, it need to be identified, and it need to be easy to follow. All right. The 2.5% need to be identified. What is the 2.5%? Therefore, you need to have what we call a control panel or a dashboard. The dashboard is what you built in the beginning. The dashboard will be the combination of your scenario, your assumption, and all the numbers that are plugged in. So when someone see your model, it links to the dashboard, and then you give notes. What is this number? What is this number? Let's say you want to use inflation. You put the control panel number, you put inflation 5%, and then you multiply the number in projection plus 1, and then multiply by 5%. So when you project it to the right side or the forecast, it will increase 5% in terms of cost every year. Outputs, presenting the model and easy to understand. Okay, there are hundreds of ways to present the model, right? One of the easiest way is to create your own dashboard and put the chart. The easiest way for you to show models are in charts. If you go to YouTube, there are hundreds of ways for you to create a good dashboard. Why? Because dashboard will take you like 6 hours to 12 hours to build, just in terms of chart. You might think that, oh, my chart is good enough because I learned in my company already. Okay. If you open the YouTube and you try to find dashboard for Excel, it will be shown lots of options, and then they will teach you one by one. This is how you can present the model much easier. Okay. Okay. Things to do when developing a financial model. First, you have to assess data information and accessibility. Determine your key indicators that require focus and use the audit reports. Populate opening balance sheet position from most current audit report or in-house report. Determine which balance sheet account that are immaterial and do not require movement. Determine financial management parameters by calculating historical ratios. Check balance sheet account in first year projection against historical values. Recalibrate if material is the different is materials. Work with management to develop complete 5-year investment program and new financing source and terms. Develop amortization of existing loan associated with balance sheet. Develop detailed stream of sales revenue and OPEX. This is the most custom worksheet. Key technical parameters need to be coincident with investment programs. Develop base projection and constant cost and check result. Perform sensitivity analysis and make modification if necessary, and then finalize. Okay, I will try to break it down one by one. Okay, what do I mean by populate your opening balance sheet from the most current audit report? Okay, populate means you have to break it down. Okay, when you see a financial statement, you see lots of notes. Most of people doesn't exactly read the notes. But when you build a model, you have to understand the industry. You will have to understand the company itself, right? In order for you to understand the company, you have to open the notes. The notes are important for your model. Let's say you want to build financial projection, right? And then what is the most important part from the balance sheet you have to take? One is the account receivables, account payables, inventories, tax payables, and then the biggest part normally are the fixed assets. Okay. The fixed assets are normally very important on most of company that we did for financial projection. Why? Because most of the assets belong to the fixed assets. When you build a financial model for several purposes, such as valuation and everything, depreciation become one of the most important part. Same thing with capex. Okay. When you build the model, you need to understand how much the company spent on the capex, how much the company spent historically on the capex. Let's say you see a financial model that has historically 100 billion of capex every year. And then when they plan to sell you the company, they suddenly decrease the capex into 10 billion. You will have to ask why. Because historically you spend 100 billion, and the future you say that you spend 10 billion. This is 10% compared to historically. This is the explanation that you will require to identify. This is the explanation that you will require when you did financial due diligence. When a company is being sold and they reduce the capex, you might want to learn what Damodaran mentioned about net sales to capex. Net sales to capex means the company need to maintain the capex when they maintain the sales. Why? Let's say you are operating manufacturer company. In order for you to build a certain amount of quantity or product, you will need to have a certain amount of capex, right? Not only the capex, just the COGS and everything, but the capex means the machinery. It will deplete, right? When you deplete it, and then you will have to do maintenance. If you if you create the same quantity like last year, and then suddenly your maintenance for the capex decreased by 90%, this is not acceptable, right? That's why sometimes when we saw a company being valued and they use this kind of method, we understand that their plan is to increase the valuation. Why? Because when you build a high capex, it has an impact on your free cash flow to the firm, which also have impact on your valuation. So this is why, well, even though you build a basic financial modeling, when you build one, it has lots of connection, especially if you build this one to do a valuation or to do a transaction. The basic modeling need to understand this is a basic one. You will need to understand intermediate and you have to understand the advanced before you start creating your own valuation. Okay. And then there's also in here what we call by determine financial management parameters by calculating historical ratios. Okay. Why this one is important? Okay. This one is very important because historically, if let's say your profit margin, your gross profit margin was 20%, right? You're a manufacturer company. So your gross profit margin is 25 to 30%, which is okay, right? Because your COGS and everything is already paid. So this is a gross profit margin. Your gross profit margin is 25 to 30% historically. And then suddenly when you create a projection, the gross profit margin either decreased to 5% or increased to 50%. This is where you must understand that something is wrong, right? The easiest part to understand whether your projection is wrong or right is to see whether your ratio is similar with the historical. If 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 the company is already a going concern company, right? If the company is going concern, then there's no lots of adjustment when we create the projection. But if you create a startup company projection, you'll see that the growth can be exponential, right? Why the growth can be exponential? Because when you create a startup company, your financial projection at the beginning might be Zero means it hasn't started yet. There are no beginning balance in your projection. What you did is year one. Why it's called year one? When you create a financial projection for startup, for oil and gas, and for anything that has certain year and need certain year to be developed, you cannot just use 2004, 2015, 2020. No, you need to put the year one. The year zero is when you begin your balance sheet, right? The year one is your forecast. Because when the year one start, it's mean for oil and gas, it has start being developed. For startup, it means it has start spending its money. Okay. So when you build all of this into your model, you will have to understand what is the purpose of my financial modeling. But I will not suggest you go to oil and gas company and build a basic financial modeling. And because that will be like a suicide. Okay. What is the meaning of check balance sheet account in the first year projection? Again, historical values. Okay. In this training, I will show you the easy part of creating model and then the hard part of creating the model. I will not teach you about the indirect cash flow because right now we are using the direct one in here because this is basic one. And then the number 7 is work with the management to develop a complete 5-year investment program. Okay. Whether you want to use projection for 5 years, 10 years, or 50 years, it will be up to you, right? But basically, when you create a model, you will have to understand the purpose. Why it require a 50-year projection when you can use a 5-year and then use terminal value to calculate for valuation. The idea of having a longer projection is for the contract. Why? Because when you have a contract, the projection need to be developed until the end of the contract. Develop a detailed stream of sales, revenue, and OPEX. Okay, why this is called the most custom worksheet? Because most of the time I saw that people are using growth. It's okay. Growth can be used when you're developing basic financial modeling, right? It's a basic one. But when you say that you want to sell your company and you're using the growth rate, most of the time your counterparties, their advisor, will probably challenge you. You can use data such as RAPBN, Bloomberg, S&P Capital, and other custom data. But basically, you will have to provide them with certain percentage that are easy to defend, right? Let's say you want to say that, okay, I'm a trading company. I'm a trading company. I want to sell my company and then I want to project it by 5%. Okay, where do I get the 5%? The simple part is you look for the inflation. If you want to find inflation, you open Google, you write RAPBN 2024. Open the book, you can find the inflation for last year and then for next year, I think. But basically, you got the inflation, the real inflation that are approved in Indonesia. If this one is not accepted, there's no discussion needed because this is from the government, right? The second one, you can find the BPS, Badan Pusat Statistik. This is also legit data. There are lots of information in Badan Pusat Statistik that you can take, such as growth rate for each industry every year. You need a growth rate for agriculture, they have it. You need a growth rate for mining, they have it. You need a growth rate for steel, they have it. They have, I think, almost 100 less of growth rate, but you just need to find, you just need to understand how to find it. Okay. But this one, when you create growth rate, it will be very easy to challenge. What the client want or what the buyer want, they want you to break it down. Normally, you will have to start with each product, right? You break it down to each product and then you see one by one. Let's say you are talking about oil. If you're talking about oil and gas, you will have to break it down from which wells, which location. If you're talking about mining, you will have to talk about which part, which location. Because in mining, for one company, they might have several places, and each place has a different margin. Why? Because in mining, almost the most expensive part is actually not only the labor, sorry, the diesel. This is for mining like coal and everything. One of the most expensive part is actually the fuel. Okay. The fuel will reduce your margin when you create projection for minings. So they want you to develop it one by one. And this can, just the revenue might take you around 500 rows, depending on the difficulty of the mining itself. And then that's why the basic might okay to you to use the growth rate. But when you say that you want to create the advanced modeling, it will require you lots of time because just for the sales, it might take you 500 rows. This is just for the sales. And then you will have to develop the OPEX. The OPEX is also quite complicated. But before the OPEX, you might want to check the COGS first. All right. The COGS is almost as complicated as the revenues. Why? Because it's almost identical. When you set a manufacturer, they want to produce product B, product A, they will have to develop the cost for product A and product B. The same thing for almost all industries. If you're talking about oil and gas, you want to develop the wells A. You need to understand the COGS, the capex for the wells A. If you're talking about trading, you want to trade product A, you would have to understand the raw material cost for product A. So the second part that actually quite complicated is the COGS. The OPEX part is actually quite simple if your beginning balance is already exists. So the OPEX part is much easier if you develop from financial statement that are already audited because they already have the breakdown. But if you create a startup company modeling, when this one has no model at all, it has no cost at all, you will have to understand, you need to find audited financial statement of a public company that has similar industry and also a startup, right? When you understand the model of this industry from and it's already a public company, you can see the cost of OPEX. You can see the cost of the COGS. You can see the revenue, break it down. And then you can put this as the post of your financial modeling for a startup. Okay. When you have this data, you can start creating it by percentage of something. Right? You have to check first if this company, one company, is using 2% of his salary compared to the operating profit, then you can use the 2%, right? But this is one company. If you want to defend this projection, at the minimum you need to have 8 comparables. Why 8? Because in some regulation, they normally request you for 5 to 8s. We will not mention about the regulation because this is not within the basic financial modeling. But if you have 8, that's saying in the OPEX for a startup company is 2% against the operating profit. Even as a buyer, normally they will say, okay. But if you only have one data that's saying 2% against the operating profit, they will ask why. Because when you create a financial modeling, your power is data. There are no stronger power in financial modeling other than data. Because again, forecast has lots of error, right? It will not always happen. There are what we call margin of error. How many margin of error is depend on your data. Okay. And then sensitivity analysis. The easiest part for you to create sensitivity analysis is by creating several scenario within your dashboard, right? Once you have several scenario, you can see whether this price is sensitive or not for this model. You can see whether this cost is sensitive or not against this model. You can see whether these receivables, these payables, these inventories is sensitive or not for this modeling. How do you see the sensitivity? You see it by the cash. If the cash changed a lot, it means it's sensitive. If the cash almost didn't change, it means it's not sensitive. Okay. How to build the steps? Assumption, as we mentioned before, historical data, assumptions, and drivers. Income statement, forecast revenues down to EBITDA or to net income, and then depreciation and interest. In the Excel that I will give you, we create a simple depreciation. You can learn from that one. Balance sheet, we use the forecast balance sheet and schedule for working capital. Statement of cash flow, complete cash flow statement. This is the simplest way to build the model. But I understand that sometimes the hardest part is creating the cash flow because I saw lots of model that doesn't have a cash flow statement. So they only have balance sheet and income statement. The problem with this cash flow is you cannot calculate the working capital. And when you create a model for a transaction purpose, by the end of this modeling, you might need to run valuation for transaction purpose. And when you run this one, you don't have a working capital, then it will become a problem. Why? Because in free cash flow to firm and in free cash flow to equity, you need to put the working capital and the capex. Okay. Assumption and drivers. Historical data and assumption can be obtained from data from our analysis, horizontal and vertical, data from clients, data from governments, other data from reliable source. The data from the government are the one that I mentioned before, such as Badan Pusat Statistik, APBN, RAPBN. And then normally we also find interest rate in bi.go.id. If you want to find interest in bi.go.id, you open the website, you go to the section called SECI. SECI is sector economy and something, but When you press it, it will show you the interest rate for Indonesian rupiah, US dollars, and everything. It will show you deposit rates, interest rates, and everything. So when you want to create a financial modeling, you need to have reliable data. Assumption and drivers can be divided by two categories. General assumptions, such as inflation rate, tax rate, foreign exchange rate, days in years, and then specific assumption, depending on the industry, such as service assumption, price, cost, expense, depreciation, and capex. Okay, inflation rate. Inflation rate, we normally use data from RPBN. But if you have a Bloomberg, you can go to the Bloomberg, type SCFC economy forecast, and then you can see the historical and the forecast of that country GDP, including the inflation. And then for tax rate, normally if Indonesia, we already have the information. But if you need for another other country, you can just Google it. There are lots of websites that can provide you with this information. And then sometimes you need to understand that tax rate for company might be different if the company is having a different industry. In certain region, or sorry, in certain company, sorry, in certain country, the company tax rate might be lower compared to the oil and gas industry. There are lots of example of this one, and the gap can be up to 20%. So you have to understand that if you want to try the oil and gas company financial modeling, you will need to have much more data, tons of data. Foreign exchange rate. Foreign exchange rate, if you want to use the cutoff, you can use from the BI, the Bank Indonesia. But if you want to have a forward rate, I never find another one that can provide other than Bloomberg. If you have a Bloomberg, you can just press the word X rate. When you press the X rate, it will show you which currency that you want to forward. And then you can see the 6-year forward rate. For USD and yen and other currency, they can provide you until 30 years of forward rate, which is it's okay for you to use this in this assumption. But you cannot use for valuation. Okay, you cannot use, let's say you're valuing the company in US dollar, and then you keep switching Indonesia USD, Indonesia USD, and then you got the benefit from this exchange rate, and it has impact on your valuation. That one is not, it's not going to accept it in OJK or everything, because if your income is US dollar, your valuation will be in US dollar. If your income is in rupiah, your valuation is in rupiah. If your income is in yen, your valuation will be in yen as well. Specific assumptions: service assumption, price, cost, expense, depreciation, and capex. Okay, this one will be based on the client or the model that you want to build. Let's say you want to build a public company model based just on their financial statement that you have. Can that be done? Yes, it can be done. Why? You can only use a simple method. You will not be able to break it down, right? Let's say you want to create finance modeling for bank, such as Bank Mandiri. Okay. If you create a model for banking industry, it will be quite difficult. Why? Even in the advance, not everyone can do it. because the banking model is one of the hardest part other than oil and gas. The banking model have a reverse modeling compared to the normal model, right? In the banking, your assets and your liability was reversed because the one that putting the money is not yourself. So those are liabilities. When people put their money on bank, for banks, those are liabilities. They need to generate money on that one because that is the benefit for the user or the customer. That's why I said the modeling for banks is one of the most difficult to do it properly. But if you want to create manufacture like Astra, auto parts and everything, you can use a simple model because what you need is break it down between the revenue and COGS and maintain the gross profit compared to the historical. When you have this data, you already have the gross profit. In order for you to build the OPEX, you build it based on the historical data as well, add the inflation, and see whether the range is still within the margin. Once you got the EBITDA margin, you compare to the historical margin. As long it's similar with the historical, then until EBITDA, you have the number. If you want to do simple valuation, you can do the multiplier valuation. You put your EBITDA multiplier, you got the number X. If you want to create DCF, then you go much further. You calculate the tax, you calculate the interest based on historical data. Can that be done? Yes, that can be done. Even the simple way. You just need to understand the interest by dividing the current interest that they paid compared to the beginning balance of last year and the beginning balance of this year. And then you check the cash flow, whether they paid something or not. And then you got the net income or the earning before tax. Because after the earning before tax, you will just need to apply the tax compared to historical gain. The idea of this projection is to maintain the margin. If you have similar margin between gross profit, EBITDA, earning before tax, and net profit margin, your projection most likely will be quite similar with them in the future, unless they create something different or develop something different or create new product that you don't know because you are not working for the management, right? So that is the idea of simple model. Once you can build this income statement, building your balance sheet is much easier. It's 100 times much easier once you finish, you build your income statement because 90% of data from the balance sheet are from the income statement. Okay. This is example of assumptions and drivers that are built in general assumptions. As you can see here, inflation, we use historical. Indonesian corporate tax rate, we use 11% because this final tax rate. Salary growth, we use Indonesian average. Property growth, we use RPBN. Loan interest, we use existing bank. COGS percentage, we use historical. Account receivables, account payables, and inventory, we use historicals. Okay. This is example of some basic modeling. Revenue 1, revenue 2, you add a growth rate. Like I said, you're allowed to use a growth rate as long as you have the data. This is acceptable when you build a simple modeling. If you have a small company and you want to create modeling, you can use the growth rate. Or you can reverse engineer your budgeting and create a new revenue detailed one from that one. Because from budgeting to create a forecast is 100 times much easier because you already have the detail. What you need to do is create a longer one. In this sample, we plug the number of 83% of cost, which is COGS, right? The COGS, the 83%, sorry, 83% is coming from the historical. This is the historical average of the cost. Okay. And then for working capital, other than account receivables, account payables, and inventories, we have what we call advance payment and advance purchases. This percentage also came from historical. So as you understand, when you build the forecast, there are lots of historical data that you can receive when you analyze it horizontally and vertically. Okay. Key assumption for cost of sales and gross margin. Well, like I mentioned before, when you review your cost of sales, your OPEX, and your COGS, there are certain margin that you have to keep. Question to get a more detailed information that you want is such as, what are the key terms? What do I mean by key terms? Okay, when you create a model for gas company, oil company, manufacture company, or fuel company, or even airplane company, there are always a key terms. All right, what is the key terms? There are limitations based on regulation. There are limitations based on SOP. There are limitations based on utilization. There are limitations based on the terms. There are lots of combinations that will limit your revenue. For manufacturer, your limit is up to your utilization. For fuel company, your limitation is up to your gas tank. For oil and gas, your limitation is up to your liftings. Okay, there are lots and lots of things that you can understand by understanding the key of terms. If you're trying to do oil and gas, you will have to understand what we call term service and off contract, or oil service agreement. They call it OSA. In oil service agreement, there will listed hundreds of terms, and you will have to build those into your model. That is the idea of oil and gas. If you are building a manufacturer projection, you will have to understand your utilization of each machine for each product. Let's say your machine can create 5 products, and then for each product, the utilization is 20%, 20%, 20%, 20%, because you're divided by 5 for one machine. And then you will have to understand that 20% cannot exactly be achieved every day. So there is also utilization of that 20%. When you recombine the performance from your manufacturer or your team for a manufacturer team, then you can see the range of utilization. When you have the utilization rate, you can adjust it forecast for the forecast. But you have to understand, you will never reach 100% of utilization in manufacture. If you reach 100%, there are certain percentage of certain time you will have to put as a downtime for your plant. Even in CPO, the palm oil, you cannot reach 100% of plantation. At certain point, the plant will die. At certain point, you will have to do replanting. At certain point, it just doesn't work because lots of stuff, right? Weather, pupuk, and everything. So basically, it will never reach 100%. Even in banking industry, you cannot reach 100%. So when you build a model, you're not allowed to put anything 100%. Okay. I've never seen anything being utilized 100% actually. Mm. And then prices. Are the price fixed? Okay. Actually, this is the most difficult part for basic modeling because price is actually very sensitive, right? Whether you're creating manufacture, whether you're creating everything, your price is always sensitive. How do you get the forecast price? Okay. In order for you to receive find the forecast, you need to utilize data. Normally, when the price at, let's say, X value, for forecast, you can add inflation. Normally, we adjust because in the real world, normally, when the inflation increase, most of the item also increase, right? Therefore, with this logic, you can apply inflation price. The second part is real data. Real data, when you have data from Bloomberg, S&P Capitals, you can try to find the forecast price for idle mining industries, CPO. CPO, you can find it in World Bank website called Pink Slip. They have lots of commodity price there until 2030. But for oil and gas, they don't have one. So for oil and gas, you need to find it in the Bloomberg and then S&P Capitals. Normally, they will provide you until 2030, 2035, right? And this one you can use. This is the basic data that you will need or require to build your basic modeling. But the simplest part, you can use the inflation. Why? Because in the end, when you use inflation on your price, it will have impact on your revenue. And then you use inflation on your COGS, right? In the end, it will maintain your gross profit margin. And then you will also use your inflation on your OPEX. Therefore, you'll maintain your EBITDA margin. And then you will also put CAPEX. Even though it's being maintained, it will not have a significant impact on a 5-year projection unless your CAPEX is very high. Therefore, what you want to maintain is actually until the margin part. As long as you maintain the margin part, it will be much easier for you to explain to the client or your boss that this projection is built based on this data. As you can see, the margin historically is X number, and the forecast on average is X number. Compared to industrial, our number are X, and the industry are Y. So are we still within the industry level? That is normally what we want to see. Thus, your margin is still within industry. Normally, when we review projection, because as you know, RSM has audit team, we normally review our client projection, right? my first question is always one. Is it still within the historical? The second question would be, is it still within industrial? The third question, why it's not? That is the three question that I always ask. But the third question will not be thrown if the first question is yes, and the second question is yes. Okay. In which currency? Okay. Depending on what material you might want to understand, it might be better if you use that currency, right? If your income is in US dollar, you might want to maintain everything in US dollar as well. It will be much easier for you compared to keep on finding the forward rate, because I understand forward rate are very difficult to find. Reviewing sales and gross profit by category. Okay, this one I already mentioned. And then a drill down into even further detail might be necessary if product is sold in different size and or location, and to assess sales and costs by currency. Okay, a drill down might be necessary for you when your product is sold by size, different size. Let's say you are a manufacturer company, and then you have a this different product, a different size, and different location, and all spread. It's just like the Indomaret projection or alpha. Okay, you need to split each location. You need to split each product. You need to split each cost. The last time I built Indomaret projection, I need at least 2,000 lines just to build the revenues. And that was, I think, around 2015. So as you understand, the franchise, you can just put as one line, right? But the one that own directly, you need to split it. For every sensitivity has different sensitivity. I mean, the sensitivity for franchise is only for franchise. And the sensitivity on the location need to be run on each location. Because when we run the cost increase and franchise, it doesn't mean you will have to increase the cost for your own place, right? So this is why a drill down is required when you create a very advanced model. OPEX, okay, this is one like I explained before. We take from the historical and then we put the inflation. It's simple, but you just have to maintain the EBITDA. If your EBITDA margin increased by significant amount, then something in your projection need to be adjusted. Normally, in projection, that part is actually your inventory. If you put inventory in your CGS, it will kind of change everything. So you have to understand that part first. Key assumptions, OPEX. Okay, this one, like I explained before, it's important to provide a detailed analysis of overhead. There are certain extent of overhead, such as fixed, semi-fixed, variable, discretionary, not discretionary, and seasonal. Since you build a model, sometimes you will ask to build the model based on the IFRS, right? If you build your model based on the IFRS, then sometimes, I'm not saying in the basic model, it should be on intermediate or advanced model. The rent need to be put as assets, right? Because if you paid for 5 years rent, those will be your assets and your liabilities as well. So you need to pay it and put it on your balance sheet. What key assumption have management made? Okay. Inflation, staff recruitment, moving premises. Okay, when you build a model for F&B, on the first year, normally they will have a small staff, small amount of staff, 5 people, 10 people. And then on the long run, they will start increasing the staff recruitment. So on a big F&B, sometimes you will see the model year one, 10 people. 6 months later, 20 people. Second year, 30 people. Why? They are assuming that the utilization will increase. Therefore they will need more staff. But when you create a model for going concern company and then it's already operating at its peak, you don't need to actually create a staff recruitment. Why? Because when you put OPEX and then you assume it will increase by inflation, by default, you are maintaining this amount of number of employee. But if you want to be detailed, you can break it down. What you need to do is you divide it. The salary divide by amount of people, and then you got the average. On the new people, you can just put this average multiply plus new people. Let's say 1,000 into 1,200. X amount multiplied by 1,200 plus inflation. And then you have another 200 people. How do forecast overheads compare with the current levels being incurred by the target? A run rate analysis can be helpful rather than the LTM. Wages and salaries. Okay, this one I already explained just now. Okay, but in some projection, advanced or intermediate, you need to calculate the detailed payroll, right? And you need to calculate as well the liabilities that come with certain amount of people. This is actually an intermediate or advanced model. When you want to build a basic model, you don't need this one. But if you want, you can use it as well. Okay, assumption and drivers for depreciation. Okay, will be a sample this one. Okay, this one is example that I have provided you in the Excel. So depreciation schedule. The acquisition costs come from your balance sheet. Same thing with your accumulated depreciation. When you reduce between acquisition cost minus the depreciation cost, you got the book value. Okay. Once you got the book value, you find the depreciation for each year. How do you got that one? It's by dividing the book value divided by year of amortization life. In order for you to find the useful of life, you need to find in financial statement or as the management. Okay. Once you got the depreciation for each year, you can start calculating it like the one below. For building, machine, vehicles, and office equipment, you can split it one by one. And this one need to be accumulated in your balance sheet. Okay, this one is income statement example. Revenue obtained from detailed calculation or growth rate from historical. COGS obtained from average historical or industry or management information. Operating expenses obtained from historical breakdown, calculation, or management information. Depreciation obtained from calculation of fixed asset that was obtained from financial statement or management. Interest expense and financial tax expenses obtained from calculation of loan, deeds, or management. And then for the tax one, you got it from the management information or industry common practice. Balance sheet. Okay, I think I will. While calculating projection for balance sheet, normally there are other items that didn't change due to material or immaterial amount. The one that you're not allowed to change are the material. Okay. You need to always run sensitivity on the material amounts because it is material. Considered as not important by the client, lack of information, nature of the past, and unpredictable. Okay. Balance sheet example. This is example of the model that we will provide with for you later on. And then we provide to you along with the links and the macro and everything. So as later on, you can see the account receivable can be calculated by using the formula. Same thing with inventories and accounts payable. The fixed asset is obtained from calculation of fixed asset, the one that we will provide you as well. And then the trade, sorry, and then the bank loan is actually, you need to understand the deeds. Let's say your bank loan is from Bank Mandiri, yeah? And then you have the deeds. You understand the loan prepayment, you have the interest and everything. You need to put the simulation of that in your projection. When it's getting paid, how much is interest, how long the loan are. You need to put as the deeds. You cannot just adjust it if you have the deeds. Capital. Capital and usage has been determined is from the management. Why? Usage has been determined means you want to give dividend. If you see this projection, why the cash are low at 2023? It's because the company always provide dividend for the shareholder between 100 to 200 billion every year. And as you can see in the cash flow, each 2 years they can provide the shareholder around 100 billion, right? That's why on 2028 they have accumulated of 500 billion. Okay, this one, the debt, we already explained. Okay, statement of cash flow. Okay, statement of cash flow, we have what we call direct method and indirect method. The direct method net cash inflow and outflows to deduce total cash flow while ignoring non-cash transaction. Indirect method, using the indirect method, change in asset and liability accounts are added to or subtracted from net income. Statement of the cash flow. What is the difference between direct and indirect cash flow? Most business operate using the accrual method of accounting. The indirect method is more widely used. The indirect method is also quicker than the direct method because it utilizes information readily available on on the income statement and the balance sheet. Here are a few other differences between direct and indirect cash flow. The direct method only utilize cash transaction such as cash spent, cash received to determine net income. On the other hand, the indirect method use net income as starting point before tacking on non-cash transactions such as depreciation, amortization, and more. The direct method completely ignores the non-cash transaction, which are core to the indirect method. While utilizing the direct method, cash flow must be reconciled with net income. Under the indirect method, net income is automatically converted into cash flow. Unlike the direct method, the indirect method requires preparation for conversion when accounting on accrual basis, and then the direct method of accounting is generally more accurate than the indirect method. The indirect method will require additional adjustment to the cash flow statement. Although the FSB favors the direct method, Accountants tend to prefer the indirect method because it can be accomplished much quicker than its counterpart. Okay, this is example of indirect method, right? Net income depreciation can be obtained from your income statement. Changes in current asset, changes in non-current asset, changes in short-term liabilities, long-term liabilities can be calculated by current and non-current changes. Okay. The short-term and long-term liabilities, you have to exclude the loan. Why? The loan is actually calculated in your financing activities. CapEx is obtained from management or your assumptions. Dividends and special dividends can be obtained from the management, and then change from the net cash is actually calculated from the net cash from operating, net cash from investing, and the net cash from financings. Once you obtain the change in cash and you add the beginning balance, you got the ending cash. Okay. Okay, this one we will skip. Sensitivity, we already explained before. I already have 15 minutes left. So what is the common mistake of financial modeling? The model becomes the end goal, not the financial result. The model tries to do too many things: tariff structure, trend analysis, volume forecast, demand elasticity, and develop a separate subsidiary models. Not properly organized. Cutting corners. What is meant by cutting corners is actually plug-in numbers. A detailed breakdown or elaboration on non-material variables, requiring inordinate amounts of data. Investment periods should be based on contract or agreement. For CPO, it will be based on HGU. Projection periods should be based on contract or agreement or minimum 5 years. Escalating revenues with expenses, accumulating cash or negative cash balance, linking to other workbooks. Okay, most of the common mistakes are still done by majority of the people. When you link your workbooks to other workbooks and you run it on other computer, you don't have the internet, it will most likely become ref error. So that's why you need to break a link. You can find on how to break the link in the Google, right? On most my model, even the one is most complex is only 1 or 2 MB. But when you create an error, your model can become 16 MB, even if you only have one sheet. It's mean either something is error, your data is corrupt, or you have 10,000 name manager that was hidden in your models. If you want to find the hidden names, you can Google it and type unhide all names macro, right? So this one will come to the macro. How to enable your macro first? Okay, when you open your Excels, you go to the Excels option, you open your trust centers. When you open your trust center settings, your macro setting need to enable this part. Enable VBA macros, enable Excel's macros, and trust access to VBA project model. The one that we will provide you, the Excel, will also need to be active in this way. Otherwise, you will not be able to open the Excel. Okay. The macro itself, how to open it? If you haven't opened your ribbons, you need to open your ribbons first. It means the developer will always hidden unless you allow it, because it is not by default to have the developer mode in your Excels. Once you have the developer modes, you can press the Visual Basics, right? Once you see the Visual Basics, you can see the modules or the workbook. If you want to write projection, you will have, sorry, if you want to write the macro, you will need to open new modules, right? When you open new modules, you can copy paste your formula or your coding. For you to create a coding when your background is not software engineers, you can go to AI. For most of the time, I'm using the black box AI because this is AI for coding. On second part is ChatGPT. The easiest part for you to develop a macro is by using this AI, because I will not ask you to spend 6 months or 1 year to learn VBA, which is a Visual Basic, right? This is a new language. Will be not like Japanese. This is not like Korean. This is not like any language. This is a machine computer language. And this is pure logic. Instead of wasting your time, the easiest part is just ask for AI. Let's say you want to develop a model that can do A, B, C, D, E, F, G. You need to split it one by one. Okay. Once you finish splitting it like this one, above is one coding. All right. The second one is run all macros. I mean, everything you write here will be run by clicking one button. Okay. In this part, this one example of cash flow, the easy cash flow, right? I will show you the difference between the cash flow that was made and the macro. But this one, you can exactly copy it or get it from the AI as long you ask it correctly. The AI is only as good as your imagination. Okay, because as you can see here, there are sub, there are dim, there are integer. This is computer language. So we will not waste our time to learn about that. Okay. How to use it. Okay. This is the button. The button is within the developer ribbons. Okay. Once you got the button, you click it on the right, click right, and then you can assign the macros. Okay. Once you assign the macros, when you click it, it will run the macro that you have read, right? Okay. So example like this one. Let's say I don't have the time to calculate my cash flow because I just want to create a basic financial modeling. This one is your cash flow, right? Sorry. Wait. Well, anyone can see it actually. This one is your cash flow, right? It take you what, 45 minutes, 30 minutes to develop this ending cash. So what I create is a simple macro. This number will be generated in a plug-in numbers based on what you need. However, you have to understand, if this one is negative, it means you have to add some things, either loan, equity injection, or something else. But basically, you need to add something if it is negative. Okay. What you need to do is only clicking this number. But if you want to use the ending cash, it's also linked below. What I want to show you is just simple. If you use macro, there are times when you can save lots of hours, right? Like right now, we are building a model with macro with so many case. If we don't use macro, for each case that we change, it will take 30 minutes. But because we use macro, for each case that change, it will only take 1 second. This is the idea of simplicity. But again, because you use how to use, just because you understand how to use this macro doesn't mean that you need to exclude the cash flow. You still need to calculate the cash flow when you need it for valuation, to understand your working capital, and to understand your capex, loan, and everything. So those cash flow is actually for you to analyze. And in this basic model, we skip those. We just get this one. Okay. Okay, I think that's all. Okay. Okay. I think we can start with the questions. Okay. I don't think I have any question ya, Mbak ya.
Iya, Mas Syada belum ada yang nanya. Mungkin Bapak dan Ibu bisa mengajukan pertanyaan. Oh, sudah ada nih satu. Saya coba saya
Silakan.
kirim.
Okay. The question is actually not on basic modeling, but I will answer it actually. It's okay. How does risk assessment influence financial modeling for budgeting, and how can risk be integrated into financial modeling to ensure its inclusion in the budgeting process? Okay. One of the idea of modeling is to add risk. I understand on that one. But the idea is like this. We need to have the percentage of the risk to happen. Let's say you're doing agriculture, and then you say that the crop for next year will be declining. But how many percentage? Okay. What is the impact? Okay. This one is very difficult, but I want to tell you, with Monte Carlo analysis, you can do it. Okay. When you run a Monte Carlo analysis, you can create 1,000 cases or 2,000 cases just by adding the mean and the max. The minimum is normally decreased by the crop, right? If you want to risk assess, the maximum is 0%. And the random is between the minus and the 0%. So when you develop a Monte Carlo analysis and you have these two numbers and you run 2,000 cases and you see the chart, you will see in standard deviation, in the median and percentile, what will happen most likely, because you have 2,000 cases. You can also run more, but even 1,000 cases, my computer already hang. So I think 1,000 or 2,000 cases is already very difficult for i7, I think. But if you are using i9, you might want to run Monte Carlo for 5,000 cases. And then you can see the chart. Okay, so next year, based on the Monte Carlo analysis, and decrease as risk of 5%, what will happen is the crop will become X amount. Okay, because with Monte Carlo, you are saving yourself thousands of calculation, thousands of sensitivity, because they will randomize the number, and will give you what is the probabilities. And that is the Monte Carlo, Bapak. No problem. Okay. Ada lagi, Bapak Ibu? We have, oh, it's already 10:30, 11:30 already. Okay. Okay, so this is actually from RSM as well. Okay, when you ask to ChatGPT, you can ask like this one. You can write, the beginning, you have to be crystal clear to ChatGPT, right? You have to write like this one. I think I put it here. Okay, so my question is on the black box AI, as you can see, create macro in Excel to say hello. Okay, this one is exactly the same. On ChatGPT, what I wrote is exactly the same. Create macro in Excel to say hello. The results are exactly identical. What you need to do is just copy this into your module. All right. And then when you click the button, you have to assign the button. Otherwise, it will not run. Once you got these two module and button, you click the button, the hello will come up. And then you want to create something more complex, like let's say the goal seek. Okay, so let's say the goal seek. Bentar ya. So the goal seek. Okay, when you ask for the goal seek, you need to understand. I want to change target value is how many? Target value is 0. So I asked ChatGPT, I want to go seek on range D 62. I want D62 to become 0 by changing value in D7. Create macro for that in Excel. And then they will generate this one. Okay. This will be generated. But even as an AI, sometimes they will make an error, right? What we need to understand is if it is not running, we just have to write, this one is not working. Fix it. They will fix it again and again and again and again. But because my background is software engineer, when they make an error, I can fix it by myself. But for you to, as accountant, to do this, you will have to combine both of it. Means if ChatGPT is not smart enough, you go to the black box. If the black box develop a different model, you want to use either one that work. That is example of the goal seek. Okay, so basically you need to be crystal clear on what is the value, what you want to change, and what is the location. This is assuming you're using goal seek macro. If you want to create other macro, you can state what you want, how to do it, how to achieve it in macro, and then they will try to develop the model. Okay. No. Okay. So in this module 1, I put 7 or 8 macro. So you can have thousands of macro in one module. But you need to always put this one, sub and sub. Once the sub and the end sub, it means it's like close paragraph. Okay. You can put 1,000 modules on any kind of modules. Sorry, you can put lots of macro in one modules because I've put what hundreds macros in one modules. The idea of splitting these modules is because to make it much easier when you want to check it. Let's say in this model, I think the one that I'm sharing, I only provide one modules, but in some cases I have 5 modules because I split one module for disclaimer, second module for goal seek, third module for others, fourth module for others, 5 module for the others. So, but one is enough for modules because this is not exactly an application. So one is enough as long as you assign it. And the name cannot be same. This one cannot be double in any module. This one is your identity. Okay. Okay. So anyone else? You want to ask about macro or you want to ask about the modeling? This is the easiest part for macros actually, because we cannot spend months just to learn coding.
Mas Adam, boleh saya tanya?
Yes, boleh silakan.
Berarti kalau dilihat dari sampel ini,
Mm-mm.
itu yang template-nya adalah yang warnanya hitam ya, sedangkan yang warna hijau itu adalah datanya sheet mana atau di worksheet yang mana gitu ya, Mas Adam?
Kalau gini, yang hitam itu actual coding, yang hijau itu explanation. Jadi yang hijau itu nggak bisa running karena itu dia ada titik koma di atasnya. Jadi yang hijau itu adalah explanation untuk kalau orang yang mereview makronya. Jadi yang hitam ini, this workbook sheets projection, artinya makro ini di running di sheet yang namanya projection. Nah, change sheet name to your sheet name itu kalau dia di copy paste ke tempat lain, namanya sudah bukan projection, artinya yang titik 2 ini harus diganti. Target value sama. Current value itu range-nya itu D62. Nah, makanya di atas ditulisnya cell XX. Jadi yang hijau itu adalah explanation, yang hitam itu adalah codingnya. Yang biru itu adalah program yang harus ada untuk ngeset. Gitu. Jadi ada 3 part sih.
Kalau boleh saya balik lagi ya, berarti kalau kita kembali mungkin ke halaman sebelumnya Mas Adam, yang tadi soal black box. Nah ini di dalam black box itu kan ada yang namanya di sini ini kan kata-kata yang masuk, kemudian ini hasilnya kan.
Betul.
Nah berarti yang kita masukin di sini itu adalah yang hijau atau yang hitam.
Yang kita masukin ke dalam modul kita semuanya yang di sini. Bisa copy ini, pencet copy paste di sini.
Oh ya,
Ini copy
maksud
paste.
saya waktu kita memerintahkan AI-nya untuk bekerja, kan masuknya
ya.
ke sini dulu kan,
Oh ya ini betul.
kan? Nah, ini di dalam contoh yang tadi itu yang mana gitu loh, Mas Adam?
Oh, gini. Kalau kita copy paste ini semua, kita bakal dapat contoh yang di bawah tadi, Bapak. Yang ini semua. Tergantung dari coding yang kita minta, kita bakal dapat ini semua. Semuanya ini.
Ya, karena ada dua faktor tadi ya, yang atas perintah, yang bawah hasil kan. Gambaran saya nih yang awal.
Betul. Jadi kalau yang di atas itu adalah contoh kalau kita running di AI. Kita
Ya.
dapat ini, tapi saya tidak menjalankan message box hello.
Oh.
Yang saya jalankan di sini langsung ke codingnya. Nah, ini kalau if you want, we can create example on the Excel. Let me open the Excel.
Dan apabila tidak ada pertanyaan lagi, mungkin bisa di closing.
Oke, ini pertanyaan dari Pak Rizal saya jawab sebentar kali Mbak ya.
Oke.
Habis ini kita closing supaya apa? Nanti semua juga tahu yang kita bagiin ini Excel yang ini. So, ini Excel di sini kita pakai beberapa makro ya. Di sini kita tinggal pencet accept atas disclaimer ya. Nah, di sini nanti kita akan semuanya dapat data ini. Nah, dari developer ini kita bisa buka. Ini kalau nggak kelihatan codingnya tolong kasih tahu oke. Nah, ini adalah contoh codingnya. Ya, di sini modulnya. Nah, modulnya ini kalau tadi kita pakai yang siapa? Hello dari siapa namanya? Black box. Itu kita tinggal tulis di sini. So, let's say I want black box. Bentar ya. Oke, di sini. Ini nanti materinya juga dibagikan ya, Mbak ya?
Iya, materi akan dibagikan bagi Bapak dan Ibu yang sudah melengkapi feedback form-nya.
Oke. So, sub say hello. Terus search box. Hello. Dan sub. Nah, ini this one is one macro, right? So, once kita finish, kita cuma perlu assign makro. Ini aku udah punya button, aku tinggal assign makro sini. Mencet say hello. Now, if I press it, it should say, oh, oke. Ya ada dua sekarang. Bentar ya. Ada dua double and sub. Bentar. Oke, ini juga kalau error, ini dipencet reset dulu, baru dipencet run. Nah, ini keluar hello. Oke, jadi every time we press this one, it should come up with a hello. Itu jadi yang kita copy itu semua yang dihitam. Gitu, Bapak. Oke,
Thank you, Adam. Thank you.
sama-sama, Bapak. Oke. Kalau I don't see any other question, so dari kita sudah habis waktunya. Apabila ada pertanyaan atau feedback, nanti bisa dikirim ke dalam link yang sudah kita berikan, Bapak Ibu. Thank you for attending the basic modeling. Kalau feedbacknya cukup, we'll start with intermediate and advanced modeling as well. Thank you, Bapak Ibu.